Hey everybody, welcome back. So if you've been paying attention to the market, there's been quite a lot of ups and downs, a little bit of choppiness that's been going on in the market. It was still holding 30K, as you can see, just barely past couple days. We just barely been holding on to Dow 30K, and we're going to see if the market is going to move to the upside or if we're going to retest some of these levels here moving forward. There's a lot of uncertainty in the market, especially what's going on politically, not just within the United States, but also what's going on in the world. Of course, we have things like the coronavirus that is, of course, one narrative. You've got the vaccine and whether or not the vaccine, of course, will be the stake in the heart to the virus, which I believe it will not. One of the reasons, of course, is because many people are very skeptic of the vaccine. It is something that, of course, is very rushed. And of course, we're seeing whether or not businesses, of course, are going to push for these vaccines to be made mandatory. Here in New York, um, unsure at the moment if the vaccine is going to be mandatory. As a nurse, it's not something I'm really looking forward to take, especially because I've done a lot of reading on the actual one, I've done a lot of reading on the virus. Two, I've done quite a bit of reading on the vaccine. And for me, I really don't feel it's necessary. Now, of course, for other individuals, everybody has to make their own choice about what they're going to do with their body. But in terms of the market, we're definitely seeing it playing out. Whether or not, from what we've been seeing, especially with a lot of these different governors that are acting very totalitarian, especially we see what's going on in places like here in New York, and of course, as another example, what's going on across the country over in California, where businesses are being shut left and right. We've seen numerous businesses leave, like for example, Elon Musk and Tesla. We've seen Joe Rogan leave. You've had Ben Shapiro leave. You've had other tech companies that have up and left. And of course, they're moving to places where they are more free, like for example, in Texas and in Florida. And that's basically going to be the move here in New York. We've seen companies like, oh my God, I just forgot the name, Goldman. We just saw Goldman Sachs said that they're up and leaving. They're like, c'est la vie, Goldman Sachs going out to Florida. And then recently we had another tech firm that they were just like, we can't stay in California. They literally called California basically a business black hole. Like people just can't do business. We've seen places like, for example, Disney unable to open Disneyland out there, and so they've basically been shut down for almost a year. It's been like 10 months that Disneyland in California has been shut down, but in places like Florida, they're still able to do at least some sort of business so that they can basically recoup some of what they've lost. And that's basically what I've been paying attention to into the market. In terms of moving forward, there was a little bit of an article over here talking about BlackRock, and of course, there is a lot of money moving to climate change. Climate change seems to be the new buzzwords, the new social justice meme of the market. And so you have a lot of these individuals that are basically, wagging their finger that we're going to be moving out of things like oil, for example, in ExxonMobil, which I'm fine still being in ExxonMobil. I do like ExxonMobil. I do feel over the next 5 or more years, we'll see a lot of big growth in the company along with the dividend. But of course, the article goes on to say a 7 trillion climate change warning to the stock market for its biggest shareholders. BlackRock, which has significant influence on proxy battles against corporations, signaled this week it would support more shareholder resolutions on issues including climate change. And this is more, obviously this is political. There's not enough science to justify the highly investing. We've seen other businesses do it. BP, I believe, was trying to go the route of getting rid of oil and going renewable, and it was like, what? So I'm glad I ended up getting out of that one. Stuck with ExxonMobil. For those that know, I had talked about this last time that I was going to be investing into things like ExxonMobil, JetBlue, as well as Wells Fargo and Dave & Buster's Play. And so ExxonMobil has turned out to be a very good, as you can see, we've had some big upside movement from 32s all the way up to just shy of 44s. I do believe that we'll next see some resistance here at 46s. Very similar with movement into Wells Fargo. As you can see, we're trading a little bit sideways, and I kind of perceive that we will have a little bit of, as you can see right here, basically the stock having a hard time moving above $30. $30 will be our next bit, and then of course our next level of resistance will be right here at 34. In terms of JetBlue, we see a little bit of shakiness, of course. Resistance at 16, you can see that I've allocated that line so that I know once we break above 16, we will see some upside potential in JetBlue moving back into the 20s. As you can see, 16 right there, basically going across. You should be able to see that the 16 is your resistance in JetBlue, which is why I spoke in my last video why I took a small put option. Basically, when we were up here just at about 16s, I bought 2 puts for 15s, and I end up being able to cover, made about 70% on the money that I had invested. It was fine, more than enough, because I was actually long in my Webull account. Ended up getting quickly out of that once I saw what was going on in the market. So basically looking to add to my JetBlue. I do believe JetBlue will be going up, looking to really add more at 13. I believe JetBlue will hold 13s. Over the next couple of months, we'll have to wait and see how the market is going to go. There's going to be a lot of news and a lot of choppiness related to the vaccine, related to the virus. And we'll really wait and see what happens in January to see if actually Trump is going to concede or not. There's a lot of things going on. If you're not paying attention, I would highly recommend that you pay attention to what is going on politically, not just within the United States, but what is going on within other countries that can highly impact a lot of the freedoms that we hold dear here in the country. So if you're not paying attention, I recommend you really do pay attention to what's going on in the country. There's a lot of important things that we're hearing, little hints being dropped, a little bit of corruption going on. We're hearing things about China potentially making their way into the election. Whether you believe it or not, people are acting accordingly. So we'll have to wait and see how that will impact the financial markets. For JetBlue, like I said, I do like JetBlue at least into the 20s. We could see JetBlue come back up. As you can see, for the most part, JetBlue had a base of 16. So once we break through that resistance of 16, you should see it right here. For the most part, from all the way back in October of 2018, you can see JetBlue was basically bouncing off $16 and then making its way back up into the 20s. So if a lot of industry, if a lot of different airlines, like for example, American Airlines, we've heard a little bit of information coming out from United, where United kicked a family off because it was like a 2-year-old kid that refused to wear the mask, and they literally kicked them off the plane and banned them. And of course, that's depending upon how people want to look at the news. It could be not so great for a company like United Airlines. American Airlines also, I'm not really fond of. As you can see, the trend of American Airlines was never all that good, which is why I got out of American. I figured there was a lot more weakness, a lot more people who were basically long up here. They're going to be looking to dump the stock, as they probably more than likely have averaged down. So you see a lot of downward pressure. JetBlue, on the other hand, I do like. They don't have as much debt. In terms of banks, like I said, Wells Fargo for me, basically looking back at the chart all the way into the 1990s, JetBlue has often recovered, and I do believe Wells Fargo, one, will see a recovery back into the 50s, but we'll also see them bringing back their old dividend of about 50 cents a share. This, for me, is a long-term play. It's probably about 5, maybe 8 years into the future to fully see this play fulfill where I think it's going to go, especially in terms of the dividend. But that's just me. Dave & Buster's is another one that, of course, a little bit skeptical. I'm waiting for a nicer pullback into the 20s, and I do feel that is a little bit overvalued, especially because of the news with the vaccine from the Pfizer vaccine. They've said things like, we're not sure if we're going to have enough to distribute. We're also seeing other countries basically hoarding the vaccine. So if you haven't been paying attention to that, there's a lot of wealthy countries out there. So instead of seeing kind of like an equal distribution to a lot of these different countries that, of course, are in need of the vaccine to basically get their economies going, what we're seeing is a lot of wealthy people basically bid up the price for the vaccine. And then, of course, other poorer countries are basically currently are going to do without. we will have to see how all of that unfolds in the near future. If you haven't been paying attention to what a lot of the news articles have been saying, I know a lot of investors are perhaps believing that the economy will recover into 2021 and things will go back to normal. We'll be back and partying and going to clubs and this and that. If you've been paying attention, that is not the case. Just recently, Bill Gates talked in depthly about how it's more looking like 2022. And he said, and that's if other countries can basically get on board to what's going on. So there's a lot of rhetoric going on about whether or not all the countries are going to basically go back to normal, as they say. And there's a lot of articles that are basically telling people the normal that we had may never come back. And that's something to keep in mind. Like I said, there's a lot of things going on in the globe politically that for investing purposes, you really should be paying attention to. So if you haven't looked at that, I'll leave some of the links in the description. Maybe I'll throw a clip down that you can listen to where Bill Gates goes for about 2 minutes, talks about Dr. Fauci also has said the exact same thing, where Americans should be looking more to 2022 and not to 2021. And again, this all depends upon whether or not they can reach the specific number. They've said they need at least 75% of Americans to get vaccinated. And then on top of that, Pfizer has said that they're not even sure if their own vaccine, of course, is going to inhibit people from getting the virus. Like I said, there's a lot of stuff going on that if you're not paying attention to, could impact a lot of the freedoms that many of us have enjoyed here in this country. It's probably one of the reasons why we've seen a lot of people basically leaving the country. This year in 2020 has seen some of the largest amounts of people who have basically relinquished their, being citizen. We've seen people relinquish their citizenship at the highest amount. 2020 has been the highest amount of people who are basically relinquished their U.S. citizenship. And we've seen other wealthy individuals, like, for example, Tom Hanks, who has basically sought citizenship in another country and it currently is residing in Greece, living outside of the United States. So these are things that are important to take into consideration. We're seeing a lot of small businesses basically go under because of the virus, despite there being no science, and many of these mayors and politicians admitting that there really isn't any science for why they're choosing to lock down a lot of these small businesses. You've probably heard the term reset that's being thrown around, and these are important things to keep in mind that will impact whether we think that there's some sort of crazy conspiracy theory, but there's actually a little bit of legitimacy to these things. And so as investors, we want to pay mind to these things, especially because if there's a change in the currency, if there is some sort of a collapse that is going on, you will want to have access to hard assets, or at the very least have access to your money, because basically being up in an account like I am, if things go belly up, if the market tanks, all these gains basically disappear into thin air. So these are some of the things I'm basically keeping an eye on. In terms of the article here spoken of by BlackRock, even though I am in ExxonMobil and I do like ExxonMobil, I am of course in BEP, which is basically my renewable play. So I ended up getting out of some of my other ones, like for example, I was in BP and I am in ExxonMobil, and I forgot the other stock. And I am in Enbridge, and that's basically my Canadian play to give me a little bit of a diversity in terms of oil. So I have oil within the country, and then of course basically North American oil out in Canada. But of course my diversity play is BEP, and as you can see, BEP is basically bouncing off of 56. As you can see, it finally broke through 56, bounced here, and then again bounced here, and finally rallied, came all the way up into the 60s. We've seen it come back down, and it's now currently looking like it's recovering. So I'm going to want to be adding more money to BP, as it is a growth stock, and of course it also is a dividend paying stock. Currently it's about 3%. It pays currently 43 cents a share, going at $58. So we could see much upside potential in the stock, because this is where basically The rhetoric is these are the social justice warriors of the millennials who are basically wanting to forgo oil and all this stuff about climate change, etc. For me, it's not something that I particularly believe in, but from an investing standpoint, I do of course pay attention to what's going on in the market. If you paid attention to my last video, I talked quite in depthly about Chewy. Chewy finally broke out into the 70s on volume. As you can see right here on the stock, you can see the stock broke out on volume, and then again we see a lot of buying volume coming into the stock, and then the stock shooting up, ending up Friday 9 points, which is why I added a little bit more money. I don't have as much money of course as I want. I probably should have put in quite a bit more like I did with ExxonMobil, but it is what it is. Up decent with what I've invested. Not a whole lot, as you can see, but basically on the $1,200 or whatever, I'm up $360. Currently, I'm at $1,500 invested. We could see Chewy go all the way up to 100, and I probably look to get out of it at some point. Chewy is basically the Amazon of pets, and so I'm highly likely to pay attention to where the stock is going to be close to the end of the year. We could see Chewy go to $100 by the end of the year, and then I'd have to reaffirm a lot of my risk portion of my portfolio, because I do perceive that the market could have a bit of a pullback for the new year. There's a lot of information, especially about unemployment, moratoriums ending, the job numbers. There's a lot of information that of course is being basically whitewashed in the market, and basically the Federal Reserve is just printing money and then not necessarily being honest with the economy, about the economy, not being necessarily honest to investors or to the public. There's millions upon millions of people who are unemployed. A lot of that information is basically going to come out for the new year, and of course, depending upon who actually sits as the president, we could see a lot of violence in the country. I mean, realistically speaking, with socialism that is basically on the side of Joe Biden, if you've been paying attention, there's a lot of socialistic practices that are basically trying to be introduced via the Biden campaign. We've seen a lot of censorship within things like YouTube, Twitter, basically censoring a lot of information. And of course, Joe Biden, I think it's in his communication cabinet, he's basically taking a lot of these people who work at Twitter and Google, etc., and is basically putting him in charge of portions of his campaign, portions of the government. He's basically giving a lot of these people who are basically censoring a lot of information, and is then giving them seats within his cabinet. And of course, this is important because then it basically blocks a lot of information that you and I may need to have access to about what's really going on within the country, etc. But that is to come over the next month, not till, according to the Constitution, it's January 20th, which is an inauguration date. It's the only date that actually matters in terms of who will be the president, and we will have to wait and see how things unfold. Again, you have two schools of thought currently that cannot coexist within the United States. You have capitalism, in reference to basically half of the country, people who have voted for Donald Trump, and then you have more socialistic viewpoints that are more like on Joe Biden's side and on the left, where they're a lot more for a lot of these socialistic, communistic practices. And of course, you have Donald Trump on the right, and basically everybody who's voted for him that is not for communism. So the two schools of thought cannot coexist. And we hear a lot of talk about things like civil war. We hear, if you haven't been paying attention, the GOP in Texas has raised talks about seceding from the United States and basically forming its own union for those, as they said, who want to be loyal and follow the Constitution because of what had been going on with the voting. Again, this is just the stuff that I have been reading, but I pay attention to what's going on within the country, and you should be too as an investor. And of course, if you're living in the country, these things could impact your future. So it's important to keep these things in mind. We may not believe them, we may think there's a lot of conspiracy theories, etc., but it's important to keep these things in mind, just in case a lot of this stuff is actually true. We don't want to be asleep at the wheel and think that none of this stuff is going to impact us. No matter who gets into power, no matter who becomes the president, the direction that the country goes will impact our lives, regardless of whether we're pro-Trump or whether we're pro-Biden. It will impact the way we live our lives, and it's important to keep on the watch of what's going on in society. And that's basically it for this video. Didn't want to make it too long. It's actually a little bit longer, but as you can see, portfolio is doing just fine. Again, purpose of this portfolio, like I said in my last video, is for dividend income, but of course it doesn't mean that we're not going to see large amounts of growth within the portfolio. Like I said in my last couple of videos, my goal is to live abroad as an expat. So for 2021, my goal is to get this portfolio to at least 100,000 with 600 a month in terms of passive income. And I want to use that money basically to purchase some real estate. I want to put down about 50 or 60,000 down and either buy 2 or 3 apartments, maybe put down a down payment for a building, and then utilize the cash flow from my dividend portfolio along with the rent to basically pay that off. 2021 is the year to start purchasing assets. If that isn't your goal, I encourage you to make it your goal. Whether you're buying real estate, whether you're buying or starting a business, or if you're buying a farm, those are all solid investments in case the currency that we utilize basically goes up in flames. If you haven't been paying attention to what's going on in other countries, I think it was in Libya, where basically the currency just disappeared. The currency hyperinflated and it was useless. We've seen things like that happen to places like in Venezuela. But when you actually have hard assets, things that you can hold on to, right? Something that you can hold on to. A stock is not something that is considered an asset, even though here it is considered an asset because it can return income in the firm in the sense of dividends, but it's not a hard asset. If anything were to happen in the country, all that goes up in flames. Basically, it goes up in flames. But of course, if you have real estate in another country, at least it gives you some options. And that's basically my goal for 2022, is to start investing and be more diverse by investing abroad. For me, it's in Latin America, primarily because I speak the language. For you, it could be somewhere different. But that is my advice to those who have been paying attention to what's going on in the country, that you should be saving and diversifying your portfolio, not just in what's in your portfolio, but in having assets and investments abroad, just in case something happens and you need to have an escape plan. You don't want to be basically stuck holding the bag here and not able to get out with nowhere to go. And that's basically going to be it. I'll check you out next time. Thank you very much for watching. Hope you have an amazing week, and I'll see you next time.